Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be doing a full supply and demand guide. I'm going to be telling you everything that you need to know about how to select the right supply and demand zones in today's video, and this is going to be the only supply and demand order block video that you need for 2024. Before we get into the video though, I just want to quickly talk about how January has been an amazing month for me and the team. We have amounted to over 20 RRs intake profits. And yeah, you guys can see the various signals that were sent, which, resulted in the over 20 hours intake profits. And February signals will be starting soon. So I'm going to give you guys a second chance to enter in on the mentorship at a discounted price of just £100. You will be, this will only be here for 48 hours. So please do take advantage of this discount while it's here. And yeah, with this £100 one-time fee, you get access to the February signals and the rest of the signals. You get lifetime access to the course, everything else, the weekly Zoom calls, and all the good stuff. So yeah, guys, make sure to check out the mentorship, first link in the description. But without further ado, let's get right into today's video. Alright everyone, let's go over the simple definition of what an order block is, and then we're going to talk about what differentiates a high probability order block from a normal standard order block, and I'm going to be teaching you guys how to find the right zones to trade from. So first things first is let's go over the simple definition. The last up move or down move before the up move or down move which causes a break of structure is an order block, right? Now to put these words into a diagram, let's take our attention over here. So in this scenario, we have this box which is representing our order block. And how do we mark up the order block? First of all, let's just identify this as our OB. And in this case, when we have a buy order block, we call this a demand zone, right? And we identify this by using this definition. So in this case, we'd be looking at this and this, right? This movement right here is the last downwards movement before the upwards movement which causes a break of structure. So using this definition, this would be the last down move before the up move which caused a break of structure, right? It's as simple as that. And if we want to go through, a quick example of a supply zone, we would be thinking about something like this, which is if we drew this box right here, this would be our OB or supply zone. And the reason why is because if we look here, this movement right here is the last up move before this massive down move, which caused a break of structure towards the downside, right? That is the simplest way to identify and define order blocks and supply and demand zones, right? So now that we have that simple definition in place, let's look at what makes a order block valid and what makes an order block a high probability order block. And when I say a high probability order block, I mean an order block which is going to have a higher strike rate of being a successful order block, which means it will mitigate and bounce off of it, right? And I call these order blocks SM2 zones, right? Because these are zones which are high probability zones. So let's go over it. Number one is our order blocks have to have broken structure, right? This is one of the essential rules to have a valid order block. The rules which are highlighted in red are the essential rules, right? And the other rules are new rules which I use in order to find high probability order blocks. So first things first is of course the break of structure, which is an essential rule. Price has to have had broken structure in the desired direction so that we know the order block is valid. Secondly, after we see the zone being created, the move, right? The candle, so let's just say this is a down candle, the next candle has to be a high volume candle, often having imbalance or high volume, right? So again, if I was to draw this out, it would look like this. So let's just say this is a down candle. The next candle would be a high volume candle that will often have imbalance as such, right? Then we can continue liquidity sweep, right? Of course, you would have had to watch my other videos to understand what a liquidity sweep is, but if you do, then when I'm looking at my zone, right? One sec, let me just erase everything. When I'm looking at my zone, I have to see that price has swept liquidity from the left, right? So for example, here we have a section of equal lows acting as liquidity, and we can see the down move, which is my order block. So right here, this down move has swept previous liquidity to the left side, right? We can see that these equal lows were swept by our zone, and then price pushes up, right? This is a very good sign of a valid order block and a high probability zone, right? So that is the first thing that is making our zones higher probability, right? The second thing that we're stepping into high probability zones is a level of inducement, right? And right here is our level of inducement. And what I'm looking for is I'm looking for a sort of thing that is going to cause traders to get in earlier or above my entry, right, which is my demand zone. So let's say we had another demand zone resting right above my demand zone, right? This is a good sign that this zone is higher probability, because in theory we expect price to tag in all of these early traders, give them the reaction that they want, and then stop them out and tap into my zone, and then price will make its desired move, right? And this is why seeing inducement on top of my zone is important, because like I said, it will give me that extra confidence and confluence telling me that this is a high probability zone. Third thing we look for a high probability zone is liquidity to be grabbed. And what I mean by that is, after price has broken structure, created this liquidity, and has its move, right? Sometimes price will leave equal lows, or it will leave some trendline liquidity, or it will create equal lows as it's coming down, which becomes liquidity to be grabbed, right? That's what TBG stands for, liquidity to be grabbed. And whenever there is liquidity to be grabbed as it's coming down to our zone, that makes our zone more valid, because it's telling me that price is creating levels to be grabbed in order to fuel the move towards the downside, right? In order for price to, tap into the zone and create its desired move. So now and of course, no mitigation, right? And what I mean by no mitigation is, if I clear this out, you see this demand zone, price, before this point where it taps into it, there are no previous taps into this zone. Price has never mitigated this zone before, and we have no wicks back into this zone, right? So this is a completely unmitigated zone. The only point of mitigation that we have is over here, and this is where our entry would be, right? So these 1, 2, 3, 4, 5, 6 rules are what make a high probability order block, right? A normal order block just has to have these 3 rules, which is break structure, high volume, and not mitigated. But when we're talking about our higher probability zones, we need to see this, and this. So hopefully that makes sense to you guys. And now some additional confluences, which is going to make our zones literally super rare and super probable zones, right? And are the most likely order blocks to work out, is when we have order flow. So for example, if this zone is from the reaction of a previous zone, right? So let's say we had a previous order block over here, and then this was the reaction of a previous zone, then we have something called bullish order flow. I made my previous video, my literal previous video was on this, so make sure to watch that as well. And another thing is the Fibonacci, right? And what I would do is I would draw my Fibonacci from, for example, the bottom of a range. So let's just say this is the 0 of a range to the top of a range. And then if my zone lines up with my golden lines in my Fibonacci, then I'm happy to take this as extra confluence for my trade. Realistically, what I'm looking for is for price to have created my demand zone below the 0.5 mark, so that I'm in a level of discount, right? And the same thing goes for a supply zone. we'd want the supply zone to be in the levels of premium, which is up here. And yeah, this is where I'd be looking to sell from, right? So hopefully all of those confluences and those rules make sense. We're now going to look onto the charts and we're going to look at a beautiful example of a signal that I sent on GBP USD. And I'm going to be breaking down how I took that trade using this high probability rules to find a high probability demand zone to enter aggressively from. So I'll see you guys in just a sec. Alright everyone, here I am on GBP USD and I am currently on the 30-minute time frame. And what I'm looking for now is is a zone to enter from, right? Because I can clearly see that price is bullish, and I'm going to be looking for obviously a demand zone to enter from. And now we're going to be talking about all of the rules that I look for when looking for a demand zone. So first things first is let's just identify our break of structure, right? And as we can see here, price made this previous high and then we broke it towards the upside, right? So that is giving us our break of structure. Now, when we have this break of structure, that will often mean that we have a demand zone in this area that we need to identify. And if we go back to the simple definition of our demand zone is the last down move before the up move which broke structure, we can see the last down move was over here. And we can just identify this with our box right there, right? And this is my demand zone. Now let's start running through the rules which are going to make this demand zone valid and high probability. First things first is we need to look for our break of structure. And as we can see here, we have already identified the break of structure, which is that price has broken through the previous high, giving us an indication that price would like to trade higher. That's the first rule. The second thing we're going to look for is our high volume. And as you guys can see, the candle following our last down move is a completely high volume candle, and then we are also met by a series of high volume candles, right? You can see here this is a bullish engulfing candle, and then we have another high engulfing candle, and then we have some continuation candles which are all high volume, right? So that is following rule 2. Obviously, the zone cannot be mitigated, right? And we can see here that there are no wicks back into the zone. This zone is completely unmitigated at this point. Very simple. Now we look for our higher probability rules. So this is what's going to give me that extra edge, knowing that this zone is more likely to be a winning trade. So first things first is liquidity grab from the left side. And as you guys can see over here, we have price taking out this low over here, and we also see price taking out this low over here, and we also see price taking out this low over here. So overall we have a lot of sorts of levels that price is taking out towards the downside with our down move right here, which is our order block, right? And obviously the ideal liquidity sweep would be if we had equal lows and then price sweeps it, but we can also see this as a clear level of trendline liquidity and other forms of liquidity, which is just low liquidity, right? But overall we have the trendline liquidity coming into play here, acting as our liquidity grab, and we have these lows being swept. So we also follow confluence number 1. Confluence number 2 is to see a level of inducement. And as we can see right here, we have a level of inducement, right? And what do I mean by that? What I mean by that is we have a order block right over here, a demand zone right above our actual zone, which is going to be a level to get the early buyers in, show them some reaction, and then overall come to my level, and then head to the desired level of take profit, right? So as we can see, we have this level of inducement, which I expect to be swept after some brief reaction. Lastly, what we look for our confluence is for liquidity to be grabbed. And as we can see here, we have a series of wicks acting as equal lows. We also have some trendline liquidity, which has already been swept, but still this acted as confluence nonetheless. Now that we have all 6 of these rules being followed, we can say we definitely have a high probability zone. And this is a zone where I would enter aggressively from. Not only that, but we also have the additional rules of confluence coming into play over here. So we have the Fibonacci, and we also have bullish order flow. So I'll just put order flow. Right? As we can see here, price is, if we think about the Fibonacci, price is, definitely within our discounted levels. And if I was to add something like the 88, we can see that price lines up with our 88 line, ignoring all of these other 71 levels. Regardless, we are below the 0.5 level and we are in our our discounted levels. Now, in terms of order flow, we can see that price has been reacting from previous levels of demand, creating a bias of demand zones and bullish order flow. So this zone becomes a tap of a previous zone. So we also have these 2 confluences. So right now we are following all 8 of our order block rules, meaning this is a high probability zone. And with these zones, I enter aggressively from them. So I will enter off of the 1, stop loss at the low, targets at these highs or this high, just targeting this level, right? And yeah, that is literally the process for entering off of these high probability zones. Now, whenever you find a scenario like this, I definitely recommend to be entering off of the 1 as I am doing. You can go for further confirmations with the lower time frame, but in my opinion, it is unnecessary because when you have a scenario like this, which is super rare, it is definitely a high probability zone, and these have a very high win rate of working out in your favor. And as you guys will see, tapped in, and price swiftly moves to take profit, overall amounting in over 8 RRs. And like I said, this was an actual signal that I had sent out to the team. So yeah, guys, that is the full order block guide for 2024 and how to find higher probability zones to enter from. If you guys want to figure out, if you guys want to find out all of the other methodologies that I use and the strategy that I use to stay consistently profitable and send out profitable signals, then make sure to check out the first link in the description. If you guys also want to just have the signals themselves, and in January, like I said, we have over 20 hours in take profits, then make sure to check out the first link in the description and gain the mentorship for a £100 one-time fee, which is currently on discount for 15%. So you guys, thank you all very much for watching today's video, and I will see you in the next one.